I hope I haven't been talking into a muted mic here, but it's not a very good morning, I guess. What I've been doing here is implanting or, transposing the statistics based on the open type, which we determined right over here. The open type is only determined by the relationship of where we will open this morning as it compares to the previous close and the previous range. We're going to be in a gap up open again, and here is our all-time high set in the RTH session, and now we're going to have a new all-time high for the Globex, which is always irritating. Hopefully a lot of that wasn't muted, but maybe. Not having good luck with this system today, or this week, I should say. And probably a lot of it's me. When I'm on tilt, I have to be very aware of that. As far as things are bothering me in the background, I had a problem with the code I was going to share with someone for my backtesting yesterday evening, and I realized that there's a problem there. And this drama with OBS all week has been a pain. And then yesterday, I had to straighten out some issues with Bookmap, so it's been one after the other this week. Let's press on, though. I hope I'm kind of up to date. I'm caught up there on the a bit of the statistics and the pre-market stuff. I would suspect it's an open. We are going to open extremely far out of range. What will we be doing? Well, gap rules will be applied, and overnight inventory is 100% long. I would expect some responsive selling to take profit, but who knows? Let's move on now to an important thing, which is being able to trade. The first thing you have to do with Bookmap is activate the trade control panel by clicking this padlock button, and then select a method you will use to interact with the system or the application and trade with your mouse. If you choose chart, the only place you can trade with your mouse is this active data column. If you choose DOM, then the only place you can trade with your mouse are the DOM columns, and both is obviously both. Further to that, I need to select the multi-brackets, which is my way of trading in Bookmap, and it implements the risk-neutral methodology. This is the minimum size risk-neutral package that you can trade because it needs to be an even number of contracts. 2 contracts. I determine a stop size for the entire package in ticks, and you do that by first analyzing your account risk tolerance and risk parameters, and then volatility of the market, whatever you want. Once you have this first stop configured, the first T1 or take profit target is automatic because it's for the same number of ticks as the stop is a loss. In other words, instead of you're risking 12 ticks here, you're making 12 ticks here. And for half of the package, it's for 1 contract, the package is 2. Then there's a runner for the balance. The minute you achieve T1, the trade is risk neutral. The worst that can happen is a scratch, unless you move your stop away from entry. If it's 4 lots, it's 4 lots. It's that simple. The next thing I do then, hopefully here, is activate the multi-account thing, which is like copies any trade action that I do on this account to 4 others. Come on, God damn it, automatically. Now that I've established the package size and set that all up, what I do is, you notice that there's these parameters up here, the metrics. They're the same as here. I don't need any of these bracket or other features in the trade control panel because I use multi brackets. So I can confirm that it's a 2-lot package, and then I can click the button again. The trade control panel stays active. I can trade, but I get the real estate back on my screen. So now I'm ready to go. And this blue line here is nothing more than a visual reference that I put on there. It's just a vertical line at the start of each session. I keep the entire session in view here in the chart until I'm ready to potentially activate with this, with the market or interact with the market and trade, and then I can zoom in all I want. But I want to have a firm understanding of context in the session. This is just a little marker, a visual marker for me, visual cue. When I glance left, if I see that blue line, then I know I've got the whole session in range. And that's about all there is to it. Next thing I do every day, is a TLab snap, which is something else. Let me just do that. Okay. The TLab snap. What is that? Well, it is the TLab is a bookmap Discord chat room started by a guy named Tom B, who I like and I think is a genuine person. He's been trading for 46 years. He doesn't call trades. He doesn't trade live. But I think he's probably the real deal, and he has a lot of good advice. And one of the key things over there is you're never going to be solicited to buy anything. So I do this snap every day. I usually post the numbers about 6, and every day I post this snap so those folks can have some idea of all the numbers that might be applicable to the day who don't have similar charting. So we're going to rock here in about 8 minutes. Quickly, I'm expecting, there's no question about it, we're going to gap open. So gap rules will be in force. We will have, my estimation is we've got 100% long inventory, right? We didn't have a downtick from the open in the ES. So I would suspect we're going to have some speculative or responsive selling to take a little profit, but you never know. It's a gap, right? Gap rules will be applying. Look at this ridiculous day over here. What was that for? Why? Because the government was going to go out of business. I mean, who knows what's happening now or why? Okay. I would certainly be glad when this chapter thing comes back to play here. That would be a real super duper. The next order of business is going to be the open, near as I can tell, and that's in 6 minutes. Seems like I might have forgotten something, but that's par for the course this week. First things first, we've got we can trade with a 2-lot using either the active data column or the DOM, using the mouse, right? You can also always trade with your hotkeys on your keyboard if you set them up properly with Bookmap in any of the 2 configurations. However, the computer focus must be on the Bookmap application for your hotkeys to work. And I'm working with the mouse because I believe it's more accurate and faster in Bookmap. Let's see what else. I've got the multi-account trading thing going on, and I've got the brackets going on, so that's pretty cool there. Now this one other thing about this idea, this is a TopStep evaluation account, all 5 of these. When I make any trade or any action to do with an order or something on this side, this book map, then it's automatically pushed to those 4 other accounts. My idea here is to have 0 to hero completely recorded every day with full transparency and full accountability. The reason that I push to Bookmap or stream to Bookmap to YouTube, first of all, I can review the stream on any other device, which is pretty handy because I stand up. I only have standing desks. And I stand, 12, 14 hours a day. So this is kind of nice to be able to review in the evening or whatever. And also it adds another layer of transparency and accountability. There's no editing. There's no anything. The only thing that I do at the end of the day having to do with the stream is, encode the date in the title of it and put the chapter list in so that it puts those in the description there, so it puts the people can navigate, and myself included. The stream is 7 hours every day minimum, starting at 8 o'clock until 1500. Well, I'm not going to sit and listen to 7 hours of dead air or whatever it is, or relaxing music while the market ticks up and down. I want to be able to go to the areas that are important to me, where I have something to. Was I thinking correctly? Did I react correctly? Did I miss something? That sort of thing. That's what's important, because remember, this is my trading journal. I'm talking to myself here. It's just, I'm doing it virtually. So 3 minutes until we open, apparently. I hope some way or another, this is working. Now we're going to be opening with a gap up. And again, I will be expecting some responsive selling, but you never know in a gap. There's basically 2. You're going to have some indication to retrace back and close the gap, or you're going to gap and go. That's what else is going to happen. Remember that the market is binary, right? It can only go up or down. The outcome of the next trade is 50-50. Oh, it shouldn't be a big surprise. We're going to go up or we're going to go down. Well, 1.5 minutes. Let's see if this thing starts automatic or, restarts when it's supposed to. There seems to be some discrepancy between the computer clock and the rhythmic clock or book map. I don't know. I get it used to always fire exactly on the correct moment, and now it seems to be a little bit ahead, sometimes behind. Just enough to be really irritating to me. So let's see. The stream seems like it's flowing. That's a good thing. 30 seconds. Wow. Now it's 30 seconds. And remember that once we open, I'll slap this blue line on here when we know what we're doing. And here is our gap low. It's actually here, but I don't want to have them, over top of each other. There's our open. There's some responsive selling. This has essentially been our first migrating volume point of control. We're in a gap open for gap rules. So yeah, look at how fast they got down, damn near closed the gap in the first couple of ticks. Now, not to put too fine a point on it, but tell me how you managed your risk here. My guess is you were not able to. This more muted yellow you see is the full session volume profile. This down below us here is the correct RTH session. This little dipsy doodle bullshit we're getting down here. I'm going to throw my vertical line on here now. So there's a line to mark the open. I've got about, the way I like to do this is to have 1 point high. We're not there yet. And the full session in range. There we're getting close. Oh man, come on. There we go. Jesus, that was painful, huh? 1 point high. So in other words, between each of these increments is 4 ticks. Here's our open. And we've kind of been all over the board here, but I don't think it's that important to mark them all. There's always a flurry and it's always very volatile right at the open, because obviously all that has to happen to move the VPOC is to have one more contract trade at a level than the level before, or the location before, and then the POC is going to move there. Real simple. We are in gap rules. Yeah. The ETH high is up here, so what has happened? Well, the overnight boys in their excitement put in a gap high up here. That's 02125. There we go. Now, what are gap rules? Very simple. You notice how the IB high has moved up here now, and the IB low is here under the first volume, which is exactly where we expect it to be, but that's why it's important to put that initials on that statistic down below us. Anyway. Oh, the overnight volume point of control shifted up here too, and I didn't get my stat moved up quickly enough. Sorry about that. Remember that these are dynamic in the overnight, so now this will no longer move anywhere, but I didn't get my stat moved up there. I did flag it, but I didn't get it to move. And that's from over here, huh? The gap rules say that if we close the gap, and even better yet, get accepted in value from yesterday, or from the previous RTH session, we have a high probability of trading across that value area. Now, yesterday was a big trend day, so there's not really a value area because it's in price discovery. What I'm then looking at is to just close the range. And the way I chart gaps or mark them like this, for me, a gap is yesterday's high and where we opened. So this is not correct. The gap high is the open. Right there. There's our open, there's our gap high. Here's our RTH high, there's the gap low. These two levels are in the same spot, but I don't want them over the top of one another. Up here we have a level that won't last for long, unfortunately. And that is that's an all-time high in the ETH. RTH traders don't like that. Within today or tomorrow, my guess is we'll take that out and put a new all-time high just because they're ego trippers, whatever. I don't know. The big uncertainty now, the political uncertainty and everything else, is this government closing. And as I said in the pre-market, they've removed non-farm payroll and government numbers from investing.com schedule, but it's still living over there on Financial Juice. So it'll be interesting to see whether they put out the non-farm tomorrow or not. It's not on the schedule. And by definition, unless they solve the closure today, I don't know how they could do that. And that would be pretty stupid, wouldn't it? So let me see now. Let me see now. Okay, looks like the stream is trickling along down the hill. Boy, that update screwed me up. And of course, I didn't take a copy of all my OBS settings because I wasn't back them up. That was a real moment of stupidity on Sunday night, I'll tell you. I've been suffering from it all week. I'm going to wander off to the kitchen and see what kind of trouble I can get into with a cup of coffee or something here. Let's just find out what's up. So we're open. We're in a super tight range. Remember, these are 1 point only. We're in a super tight range with obstacles all over the place. A very, very low probability trade environment. Successful trade environment, or very low probability for a successful trade. Okay. Take a quick sweep here now. One of the things I've got to do is change the IRT charting to day session only, and you do that this way. And the reason I do that is to keep the session prices in alignment as expected. There's our gap up. And now this is RTH session, the new RTH session. Same thing down here. In a minute, we'll be in a minute. We're pushing towards that gap close. We're going to have that in here in about a second and a half from the looks of things. And there we have it. So the gap is closed. That was about a nothing burger, wasn't it? I also track and plot this exact same setup for micros for those folks, or me if I need to. I'll tell you why I do this charting thing here as soon as I get it through. Yeah. Okay, the reason for this is, save, come on. Savey. The reason I changed those is to keep value area high and low and developing value area high and low in the correct relationship. The way IRT does it is the developing with the D, value area high or low, are for the current auction. It's developing, right? Makes sense. And the value area high or low represent or are those areas for the previous auction. So I share these session prices with a lot of people free if you'd like them, or they'd be of some use. Pick, drop a thumbs up and a like, and throw something in the chat, and I'll hook you up. I start pushing them at 1700 on Sunday night, and it's nonstop, continuous through 1600 on Friday, free. So help yourself. Anyway, the people that take advantage of that are used to the value area high representing the previous RTH session, and developing being this current RTH session. So in order to do that, I need to change the IRT charting to day session only. Therefore, the previous session being plotted is the previous RTH from yesterday. If I leave it at full session, the minute we open today's RTH, this value area high and low will automatically represent the overnight rather than yesterday's RTH. Complicated and stupid, but there you go. All right. Well, we've closed the gap, so that's all a nothing burger. So I can do my wonderful workflow here, which is to change the text on revisited or numbers to black. There we go. And what are we having now? What did the wise old boomer have to say? Well, we're having responsive selling for a little profit taking, perhaps, are we not? Remember, overnight was 100% long. We opened up here, and what have we done? We've not only taken all that overnight profit, inventory adjustment, we're now into yesterday's range. Will we continue to trade lower in yesterday's range? That's the gap rules. It says that if we're accepted in range, there's a high probability we will trade all the way across it. Here's yesterday's close, way down here. What's the statistic for the overnight low? How low can we go? %. So there's a 35. Here you go. You see, here's IRT conveniently highlights the correct column for the open. And if you notice how the text now is changing from gray to blue, these represent levels which we have already achieved or revisited today. We've revisited the previous highs. The gap is closed. We've achieved this one, gap high or low. We've achieved the overnight mid. We've achieved something. Not the overnight POC, though. Remember, see that that's black? That's interesting, isn't it? And that's 80.7. Should have been 0.7, not 0.9. Let's correct that. What I was looking to do here was put the overnight low in here why I got here, which is 35% right there. And again, this is for the record, right? Because I didn't put those in earlier this morning. So we're up to speed. You know what the dome, well, I didn't probably point this out, but you know, duh, this is the dome. Full level 2. Micro composite chart. There was our gap, which is no longer a thing. Here's the all-time high in the ETH. Here's the all-time high from yesterday, which was put in yesterday in the RTH. Let me rephrase that. High and low volume nodes. Full session volume profile. Current RTH session volume profile. Notice we're just one tick below hitting the overnight volume point of control. So we got right down to within a couple of ticks of settlement here. Yeah. Let's see if our blue boy, see, blue boy's escaped off the left over here. So now I got to scoot blue boy back here. Come here, you little devil. There he is. We got blue boy back now. What does that mean to me? Okay. It tells me that I have the full session so far in range, in view. And context is really important. So that's my goal. Now this is 1 point high, okay? You see the perspective here. Our range is 63 to 80. So our range is about 17 handles. And you look over here at IRT, depending on how you have this chart adjusted, and then that looks pretty dramatic. At this moment, the price levels are five handles wide. That looks a bit more dramatic, doesn't it? Perspective and scale, scope, whatever you want to call it, is real important to me. I find it important. And Blue Boy keeps escaping over here. This nasty guy, come on. Come on, dude. Don't be bashful. There we go. Wow. Okay, so let's see what the hell is going on now. It looks like this thing is thinging. I sure hope this dev guy gets that chapter marker figured out. That's will be a big step in the right direction, or that I come up with an alternative. The only problem with the new OBS, by the way, which is 32.0.1, is that the Stream Up chapter marker manager is broken, and the guy hasn't gotten it fixed yet. Everything else, it did nuke my. I don't do a lot of fancy stuff. I'm one of the if it isn't broke, don't fix it kind of guys. That's why I'm so pissed. I updated this. Did the update, but I don't use all kind of fancy everything else. What is important to me with Bookmap is all the filtering and the stuff that is set up for the sources and the few screens that I use. And, you know, I only have the 2 displays. I flip back and forth. And I have one macro which jumps to the starting soon music in that screen when the stream starts. That was erased, so I thought I had it set up properly last night, but I did not. I have to change that to a time rather than stream start. But I'll tell you, you cannot imagine, I can't imagine, and I am so thankful for the phenomenal software out there. Like OBS is 100% free. It is a group effort. That's a real phenomenal thing. I mean, that's a real complicated piece of software used by millions of people. if they suddenly decided they all wanted to make a shitload of money one day and said, well, it's not free anymore, you got to pay us, $50 every month, the internet would go dark because it's the streaming tool of source, of choice. And not only YouTube, Twitch, and whatever other gamey things that are going on. So welcome to the stream. Smack a thumbs up, smack a subscribe. If you don't do either one of those, drop something in the chat. If you don't want to do that, send money, come on. Why not? Now, having said that, I think I better test out my chat with just something here. Yeah. Okay, and there's very little delay this morning. That's really nice. I mean, by the time I turned my head from the OBS monitor, which is on my left stand-up desk, to one of the two screens above me and my 4-screen rack in front of me here, it was already there. So that's that's maybe 4 or 5 second delay. That's pretty great. Sometimes YouTube can have quite a delay, and I don't have any control over that I know of. Okay, so welcome. I'm going to probably talk about these, get out of here, talk about these numbers again, as usual. So this is, first of all, my news sources, while we're on the subject here, are free. You can pay for them if you are so inclined. Pay me if you're so inclined, come on. But they're free. I don't mind seeing somebody close a Wendy's burger over here or whatever the hell it is, or haven't seen something from TopStep. Here's what I'm interested in, and I like the presentation here in investing.com because for screen grabbing and posting to somewhere else, because it's nice, clean, concise, etc. Also, you can have, for example, this week. Right, here's all the numbers that are out this week. Next week, earnings. Here's the key one. Non-farm payroll has been removed. Any governmental number has been removed, as I would expect, because the government is shut down. In investing.com. You can also look at earnings, filter it for where you live, time zone, countries you're interested in. If you want to see only European or Asian reports, knock yourself out. Okay, so that's the story. Financial Juice is the more recent, also free news source that I use, because it has, first of all, the kind of the docket, the same idea as investing.com here. I don't like this presentation as well, for my eyes, so I don't use it to copy and paste. This little pencil neck over here ought to get sent back to Louisiana with his tail between his legs. Anyway, and on this right side is a more of a squawk box feel, where you get like the market on open imbalance and the close imbalance, and more of a up to the minute kind of a squawk box affair. Where we can keep track of, or sort of keep track of, this potential political critical risk events that we have to deal with on a regular basis. So those are the two, and that's the thing I want to point out, is that in Financial Juice, they still have non-farm payroll on the docket. I don't know who knows what, eh? Who's on third? So we closed the gap. The gap rules have been satisfied, and we are now looking like we're trading back out of it. You notice, though, that there's this big bunch of liquidity that dropped right in here around the 70 handle. Not tremendously big, but, relatively so. And that's how the heat map works, by the way. It's just a visual representation of the liquidity, resting liquidity in the dome or in the book. Like here's what I'm talking about. Well, I'll tell you one thing I wish I had in this frickin' setup. And it's probably available, I just don't know. For example, I don't even have a camera in here, a webcam or any of that thing. If I had something that would switch the screens automatically when I brought focus to the monitor, that would be so cool. But I would want to be able to do it not completely automatic, because I'm always looking at say Bookmap and forgetting that I had the last monitor switch I had was to my IRT setup, you know, and then I'm talking like an idiot for you guys. But the problem with that is there are times when I want to do something on IRT or on one of my other monitors and not have the focus of the application go there. You know, put in a password or who knows what. You know, count my billions. As much as I hate to say this, I can't imagine that there's going to be a big trade opportunity today. And I'm just so over saying that. I did come up with a disappointing turn of events last night that some code had gotten corrupted somewhere on my backtesting. So here is our day right over here, starting out. This is not in any way, this is a visual confirmation screen that I built for my backtesting rules. See a couple of the rules over here. Yesterday was a good example. Over here, you stupid thing. I'm about ready to nuke that goddamn thing. This was a good example of how the rules work for an IB continuation trade, and I don't know what's going on here now, why that's not. I see what's the matter. So none of these lines or markers have anything to do with really trading other than they represent the rules and criteria within my trading system, my automated trading and backtesting system. They are from my visual reference. So yesterday, you notice that these represent the IB high, the IB low, a continuation zone, a pullback zone, one for each. And then these are triggers based on actual rules from my trading system. Now, the way it works is A, B, C. I'm looking at something because I don't understand what's going on here. Huh. That's pretty weird. Now, yesterday, and I have a record of it in the stream, there was this IB continuation trade here. There's A. There was a B, like right here, right up here yesterday. Maybe I didn't save that changes to this chart. And then there was this trigger. And the rest is history. Fantastic IB high continuation trade. So I've got to look into that. Something's going haywire here, and I'm not sure what, but I'm not happy about it. And I mean, you can look back at yesterday's stream, as can I. And those definitely are in there. Come on, you son of a bitch. What I want to do is now get back to the today. This has not got anything to do with the trading rules. It's just the as I said, for my visual reference. Now notice there's no lines or levels here. These are custom indicators, by the way. And the others, the letters and the stuff are trading rules, or rule markers. These are just custom indicators. Basically, this is the IB high. Then we have 3 points below, 5 points below, 3 points above, 5 points above. And these dotted lines are 1 point either side. That's all there is to it. And it's just a simple custom indicator. And I'm on the wrong screen, sorry. So here we are. Let's get back to what we're doing. Whoa, a big glass of Vietnamese coffee here. That'll kickstart my burner. So we did have our responsive selling. Took that profit. Closed the gap. Don't look like they're too excited about coming across that gap or coming across that range. Also, as I said, I hope in the pre-market, it is generally agreed by traders that when you see this range big trend day over here we had yesterday, or here we had, look at it on the daily candle. Here's the market profile. Here's yesterday's, come on, you son of a bitch. Here's yesterday's open and little pullback and then straight up. You see the volume profile here. This is a trend day, obviously. There is no value because price is, the general consensus among volume profile and market profile people is that there is no value in a trend day, value area in a trend day, because price is seeking value. Now, the charting here doesn't know the difference. It's gonna change the color and highlight 70% or 70% of the volume trades. It's actually 68 and change, but everybody goes with 70. And so I try to make my stuff work. For example, the value area high and low are pushed in the session prices, and a lot of people, as I said, use them. But so where I'm going with this big long story is that the gap rules say that if we close the gap relatively early and we're accepted within range and, more importantly, within value, there's a high probability we'll trade across the value. The reason for this, me, talking about the trend condition, is that there is no value to trade across, really. Don't confuse reality, I guess, with this charting stuff, because this is going to plot 70% of where the volume happened no matter what. Does that make sense? Where are we for volume here, speaking of that? 97%, and our average 2 range per 5-minute bar is up to 4.75. Okay. So, welcome. Mr. Blue Boy's hiding again. This guy, we're going to have to put a bell on this damn thing, eh? Remember that this is a super secret deal. If you missed me describing it, it's a very expensive indicator. You know, drop something in the chat, and I'll give you an indication as to how many decimal places this indicator's worth. This is a vertical line which I slap on these at every session open. If you look back here at session opens, there's, you know, RTH, ETH, RTH, ETH. Now we're in RTH. And it's only for my visual reference. This is just a visual reference for me to be sure, without thinking about it too hard, that the entire session is in range. View, let me put it that way, in my view on this chart. I do that because I want to be damn sure what context is. I believe that's about the most important thing you can do. That's what I've come up with. Now, we're just slopping back and forth. Volume's not too light, so that's not, you know. One thing that I mentioned in the pre-market that was interesting to me, someone did a look-back study of Tasty Trade and Tasty Live or whatever they're called. They are basically I don't trade options, but that whole thing is statistics driven and probabilities, and that's resonates really well with me. And they do a lot of interesting stuff. There's an interesting YouTube thing they do after the market with experts or something like that. And there's like three guys, Elias Bivic and usually Chris Vecchio and somebody else, and Dylan Bradigan oftentimes, about what has happened that day with the market and pricing and where are we going to go and things like that. They were talking yesterday about about obviously the 500-pound gorilla in the room, the government closure. The last closure was the longest in history of 34 or 5 days. But looking back at the last 8 or 10 government closures, of which I don't want to quote a number how many there have been because I don't remember. The stock market has traded higher each and every time, up and to the right. So there's a tidbit for you. And perhaps that has got some bearing on this bullshit over here yesterday. Look at that day. For what? There was no reports. There was nothing earth-shaking happened. The only thing that happened was they confirmed the government closure. Interesting, isn't it? Yeah, so here we go. See what's going on in the rest of the world here. I see some bullshit on my phone. I don't know what for. Probably just likes or something. I guess no comments. Okay. Oh, come on. God damn it. I flipped my mouse and then I flipped my mouse on one screen and somehow it has a bad impact on the others. Okay. Let's get Blue Boy back over here and get back to our price ladder. I tell you one thing I really wish Bookmap would do. I wish you could just click set, you know. I know you can drag these. Maybe that's better than rolling. I usually use my mouse wheel, but maybe that's the problem. I don't know. Would be great to just set the damn scale and then have it, you know, have that be the case. Okay. Hey, Panda. I don't think Antonio comes here to see you anymore. You broke his heart. Okay, where am I now? What's going on? Who's on third? Where are we? Okay, talking to my brother Garrett, not my brother really, but fellow trader Garrett from Static. Lives on Vancouver Island. What a nice. Come on. Antonio doesn't love you anymore. He doesn't come here. Because you quit singing to him. You quit singing and he doesn't love you. Did he call me? Okay, let's see now. I'm reading the static there. See, that's one of the situations where having the screen go to my focus wouldn't be any good, the stream, because when I'm trying to type something in a chat room that's, or type something, somebody sent me a message in the static or wherever, one of my colleagues there that it doesn't, nobody here, nobody in the stream would care about, right? Or is not public business. Okay. So, well, we've closed about everything. Responsive selling. We're fast approaching RTH close. where we have a very low probability. Now, let me just, now that I'm sort of waking up, that coffee's kicking in, that's working pretty good. It's 26C here today, so far this morning, which is about, is that right? About there we go. It's about 80 F if you're an F'er. Again, this is Central Standard Time. We're going to take that yesterday's close, the probability of the close and the overnight low are 3547.8. So yeah, magic. We have not yet taken the overnight volume point of control, which is always the highest probability. Now, I'm sure somebody might find a day where that's not the case, but just I'm talking about just I've noticed that. And looking back over 2,000 days. It's not the highest probability, period. The most probable is always the IB, high or low statistic. Followed in hot pursuit by the overnight high or low statistic. And then sometimes, depending on if it is an inside range day type. Here, let's look at this together, shall we? So here are the four open types. Higher out of range is a gap up, higher in range, lower in range, lower out of range, gap down, okay? Here's our probability starting from the top down. So the IB high or low is the highest probability in all four open types. It's greater than 97.9.7%. That's pretty high. And remember that these statistics are, like all statistics, you have to define a data set that you're going to apply or calculate the statistics from. And in my case, it's 2,000 trading days. In 2,000 trading days, the IB high or low is exceeded by price at some point in the RTH session. The lowest probability is 97.7% of the time of the days. So, of the days where we opened higher out of range, 98% of the time where we opened higher in range, that's remember, it's probabilities, it's statistics. Everything, the way to approach this business successfully as a successful business is one of probabilities and statistics. It's not hunches or gambling or chicken feet or whatever. So anyway, what I was saying was the highest in the gap up, gap down, there are three probabilities that are higher than the overnight point of control, and that is the IB high and the overnight high or low, because they close the gap. In the two interior in range, the third is the value area high or low, and then the overnight volume point of control. Did that mean anything to anybody? I learned something. I learned a little tidbit of useless information right there that I can spout like the informational font that I am. Maybe not. I say that to the horse and he just looks at me like, what the hell are you talking about, dude? Oats. Give me some oats. In reality, I am just an old cowboy from Montana. And that's the truth. Not a broken down old cowboy. I'm still able to get around pretty good, but I suppose I'm fast approaching the period where that won't happen as well. I don't know. But I see people like Willie Nelson and Dick Van Dyke and people like, Jane Goodall and people like that are well into their 90s or damn near 100, and they're still doing pretty well. So it's possible. I guess it's dependent on your lifestyle and your genes, I guess. Well, yeah. So, I'll be right back. All right, let's get to the here and now. The to approach trading as a business of statistics and probabilities, you have to, which is what I believe is the correct way to do it. If you're interested in having a consistently successful, profitable business, not a video game or gambling or a hobby or adrenaline rush or whatever else. And there's nothing wrong with any of those things. I should probably start by saying, first and foremost, this is not a my way or the highway idea of the stream here. This is my virtual journal about the way I think I want to develop my trading business. So whatever you do is fine with you. Great. Good for you. Hope it's successful. And if you've got a successful, a system that is consistently profitable, by counting flies on the wall, I don't know, whatever the hell it is, don't quit. If it's consistently profitable over a substantial, statistically significant data set. That's really important. Outside the possibility or the likelihood of random distribution, that's really important. But anyway, let's get back to the basics here. You need to understand that this is a random market and that the outcome of the next trade is 50-50. It is a binary event. This is a coin flip. What can the market do? Tick up or tick down? Period. That's binary. Heads or tails. That's it. So to try and predict where the market's going or what's going to happen or have a hunch or whatever else is probably not sustainable to be profitable over the long term. What the way to approach it as a statistical business of, is that you identify a situation, and humans are really good at at seeing patterns, whether they're real, even making them up if they're not there. So be careful of that. But you identify something. Let's assume, in my case, as it is in my case now, the IB statistic, which I just was talking about a minute ago. Okay, there are 2 trades associated with the IB statistic that are recognized. And what I am doing now is capturing a data set of that statistic and those parameters to determine if it has a positive edge with my rules or not. If so, then you apply that trade every time those statistics and those rules are positive, or present themselves in the live market. And you rely on the law of large numbers to compound the edge or that expectancy to your bank account. Okay? And that's not just I didn't just dream this up in the shower. This is the revelation or the understanding or the epiphany of the most successful traders in the world. Ed Thorpe, Jim Simmons, Paul Tudor Jones, Ray Dalio, Soros, Ruckenmiller. I mean, pick one. Pick anyone that's a successful trader and, listen to them, read them, whatever. It will always boil down to this. Tom Sosnoff, Tom the Trader, the best loser wins guys. Tom B in the what do you call it, Trader Lab. Rod, anybody. It will always boil down to statistics and probabilities. Anyway, having said that, then I'm vetting the IB trades. Okay, there's a wow, excuse me. A couple things important there. The IB trades are based on the IB statistic. The IB statistic is not a thing until 9:30, which has just happened. So at 9:30, the IB high will no longer move up. The IB low will no longer move down with price. They are fixed. And the statistic that we were talking about over here says that in all four open types, the IB high or low is exceeded by price in the balance of the RTH trading session greater than 97.7% of the time. Right there. It is black and white. Looking back over a data set of 2,000 days, trading days. So, that over 90% of 97.7% of the time, this one or this one will be exceeded by price. There's a few important things to take on board there. And that is, first of all, this is my advice, do not trade to the statistic. What do I mean by that? Okay, the IB statistic is live now because it's past 9:30. We're below the VPOC, we're below the VWAP, we're below everything else. Boy, I know we're going to get to the VPOC, to the IB low, and so you go short. Well, that sometimes doesn't work out. Today it will, but a lot of times this happens, and you get stopped out before the statistic is achieved. Now we have just taken, right there, we have just achieved the IB statistic on the low side. So 97.7% of the time, that has come to pass. Okay? And it just did again. Now it's time for me to be aware of what's going on. And that is, there are two trades associated with the IB high or low. An IB failure trade, which is essentially a fancy name for a mean reversion based on the IB statistic. Can't get any lower, reverts to the mean. The second trade is an IB continuation trade. Comes down, nobody's going up there, let's go down and see what's below us. Those are the only two trades associated with the IB trade that I am vetting. Now, because I'm vetting these trades and this to compile a data set, the data set in each trade has to be identical. So I have to have a 3-point stop, a 3-point T1, and a 12-point T2. If I change those parameters around at all, then that particular trade doesn't fit in the data set and you throw it out the window. It's not statistically compatible with the others. And that's kind of frustrating because you can't do any of the trade management things that would be normal. Like moving out of, moving this, increasing a profit target after you've gotten your risk neutral scale. First of all, the 11th commandment, never move your stop away from entry. Actually, the 11th commandment is thou shalt not diddle in the middle. That's don't trade off the POC. But anyway. And you see what happened here. We just barely took that IB statistic out. Now we're trading back up. Is that enough meat on the bone to enter the IB failure? 57 to 59 is 2 points. The meat on the bone or the range requirement in my trade plan says I must have a clear, unobstructed path to the T1 scale. Otherwise, the entry is not valid. Well, there is not, because any level or real super high liquidity is an obstacle. And all I mean by obstacle is any of these price levels, developing value area low, settlement, POC, VY, any of this stuff, price can react, will react. Look at what happened right here, developing value area low. Price reacted. Say you got long down here at 57.5, 59, 60, you're not scaled yet, and price is pulling back towards your entry. So this does not make one feel rosy. And in my case, when you're vetting a trade like this is why I'm so focused on the backtesting story, because this is freaking boring. I'll be happy to tell anybody that. It makes for boring streaming. People that were here all the time, like Antonio and Richard and those guys, they don't come around anymore because it's so like, oh, this guy's saying the same shit every day. And it's the truth. But nobody said trading was exciting. If you think it's exciting or an adrenaline rush, then you're not trading properly. You don't have the correct mindset, in my opinion. And it makes for real boring streams. There's no question about that. But if you're interested in preserving your account, compounding your account, and being a methodical, disciplined, statistically based trader, then that's what I'm doing. And it's 100% transparent and fully accountable from the get-go. No trade has ever been taken in these accounts, plural, off-stream. None of this bullshit like a guy I used to listen to when we were living in Kuala Lumpur named Matt. He would only stream a couple hours every day. I never pay attention to reports. I never look at any of that stuff. And he might be down $2,000 or $3,000 and the stream would close. And then, well, we're closing on an L today, a big L today. And then the next morning I got back on yesterday afternoon. I made all that loss back and I'm up another $1,500 or whatever. It's like, Jesus Christ, dude. Maybe even if it was true, I would be extremely skeptical. How do you know? In my case, you absolutely know. No possibility of not knowing. And if you're not familiar with Bookmap, it is graphically, first of all, it's represented right here. Anything to do with a trade. The entry is graphically and represented, the stops, the targets, any movement of any of those things, the break even, line is all very, very vividly, very graphically displayed and recorded for, all time, both on my Bookmap recording and on the stream. So That's the point. I don't, and really, you know, think about it. This is my personal journal, right? My virtual journal. So who would I be bullshitting? Me? How silly is that? You know, that's like fat guy looking in the mirror and going, oh, man, I'm so fit. Look at me. Look at my muscle. Anyway, we are getting, now we have scaled, would have been scaled on the IB failure. But frankly, there's not enough range here to justify that trade, in my opinion. And I will also say that it's important to understand your goal, mission as a trader is twofold. A, the prime directive is to preserve your account. And secondly, on a lower scale, your mission is not to scratch, is not to achieve the T1 scale. Your mission is to achieve the profit target. That's the point. So if I don't see a clear path to that profit target, what the hell am I doing? Why am I putting money at risk? Why am I risking my account or putting risk on for what? Now we have one of the famous VPOC migrations. Still haven't achieved that overnight volume point of control, remember. Something doesn't seem right here. I'm not sure if I misspoke about the IRT study or not, but oh, it just needed to be refreshed. Okay. I was going to say, I don't see that the IB high statistic has been highlighted to blue and it has been achieved. And then I just moved away from the chart and back again, and it's up to date. So maybe that's just, I need to confirm the update thing there. No problem. All right. Never mind. Never mind. Okay. Now I need to look at something here. You'll bear with me. This is my backtest confirmation chart. Nothing that you see here has anything to do with my actual trading system, except for the fact that these, the rules are the same, and these lines are custom indicators that represent levels used as criteria in the trade system. Now, the way it works is you'll see an A. What I'm looking for is an A, a B, and a T. That's rule A, rule B, and rule T, and then T is the trigger. You don't see an A here anyplace, even though we have exceeded, or we have taken out. Now you're going to see one because the open is above the IB low. And what the criteria says is it needs to be, and the close needs to be below the IB low. So you see the A signal fire. And it needs to be after 9:30 because that's when the IB stat starts, right? So now we have an A signal. What we need to have now is a continuation into this zone, which will give us the B, and then a pullback to within 1 point either side of the IB low, and that would be the trigger. There's our B, assuming that this bar stays there. The next would be the trigger. And once again, these are rules that I've built up for my trading system, which I use to backtest. Obviously, you can take it one step further. If you want to make it an algorithm, you could do so. But that's not where I am. And you notice that the B went away because we closed below this range. And this will not be a B because it's not going the right direction. The trading system looks like something. Wait a second. Here's what I want. Here's what I want to do. Oh, way too much work involved in this bullshit. I'll tell you that right now. Where did RT? There we go. Where am I? Well, there should be a trading system here called RNT, IB. Oh, these are charts. I'm sorry. Wrong. There we go. I was looking at something else. This is what I'm looking for right here. This is the RNT IB version 6. Okay. So these are the trading rules for that IB trade. And now we have a B. No, we don't. We have a different deal here. We have the trigger, which is good. This trigger now cannot be taken because the trigger says that we enter this zone and then we pull back to within 1 point either side of the IB low. And that would be the trigger, but that's no good because we don't have a B. We don't have our second rule confirmed. This is a work in progress, mind you. And I just worked out earlier last night before I went to bed the depressing fact that as I compiled these two together over the weekend, I broke my IBC only setup. Now we have a B, but it isn't going to be any good yet. It has to close in here. See how it's ducking and diving away over there? This is the IB trading system, which I use for backtesting. This is the visual confirmation chart, which I use to confirm the zones and the rules, which are applicable over here. But this has nothing to do with these. Now, when I'm backtesting, I can send to the chart, and then these rules will be graphed over here. But I don't want to do that during the trading day because it takes a lot of bandwidth and I don't want to accidentally some bitch be trading, if you know what I mean. We still haven't gotten a B yet, huh? I know this might be boring, but I'm going to keep watching this because it's important to me. A few days ago, and somebody in Static, Garrett was just said, do you remember when you got stopped out? I had a trade that maybe best described over here. It pulled up to and came back to the trigger, just like right here. And I took the IB continuation to the upside and got stopped out. The real, and in review of that signal on this chart, it was not correct. It had not fired the B signal. And the IBC and the IBF went on beautifully to make a big profit. So, you know, it ain't over till the fat lady sings, or whatever, however that goes. It's not a signal until it's a signal, right? Oh, yeah. And now the converse is in play here, right? Again, is this an IB failure, an IB continuation signal? No meat on the bone there. One tick or less, 3 ticks to the overnight low. And in a different world, this could be a signal lower. And in any of these cases, had you taken them and you're scaled, good for you. You know, put on your helmet, put your feet up, and watch what happens. Back to the discussion regarding trading as a business and using statistics and all of that, and that it's not my epiphany, it is just restating the beliefs of the most successful traders in the world. It is also the exact business model of the gaming industry from the point of view of a casino or the house, whatever game. Think about it. They play no game. They participate in no game for which they have not predefined a specific edge. This continuation is going to keep running, and I'm going to be pissed as usual. Anyway, for which they have predefined a specific edge and or expectancy and the specific rules. Once they do that, then they put that game on the casino floor, and their mission in life is just to play that game as many times as they can in 24 hours. They know full well that there will be losses or gamblers will win. They know there'll be streaks of where gamblers will win or streaks where they will win. Those are called random distributions. That's why you try to do a back test on a data set outside the probability of a random distribution. And I don't think anybody would argue with the fact that the gaming business is really profitable from the point of view of the house. Now, a random distribution is, if you're not real clear about that, it's real simple. Flip a coin. We all know a coin flip is 50-50. Flip a coin 10 times. Does it surprise you at all that you have more heads or tails in 10 flips? That is random distribution. Flip that coin 1,000 times, and you will be pretty close to 50-50. That's it in a nutshell. That's the theory. Let's look back over here. I'm so excited to see if we've gotten all the rules. No, baby. Oh, yeah, there's a B. Okay, so there's our A rule. Here's a B rule. Now, what needs to happen? We need to trade up to the target, which is we did that here, but we didn't have a B, right? And that would trigger an IB continuation trade from the bottom off the IB low. And these are the rules as I have defined them so far. And the idea of backtesting, what is so great about backtesting is you can look at a buttload of data. You know, I can look at 500 trading days, and it takes this computer system about 3 seconds to compute that. In other words, to go back through and run all these rules on every minute candlestick for 500 days. Think about that for a second. And it will give me a real comprehensive look back. But what I'm doing here is visually confirming these rules. There's A. The IB low was exceeded with the following criteria. The open was above the IB. The close was below the IB. The candle or bar before the signal, the open was higher than the close, and the close was above the IB. So that is an A. That is the first signal. I just made the signals A, B, and T trigger. The T trigger that you see here is correct in that it high reached into within 1 point either side of the IB high. I haven't bothered to, eliminate or define the criteria that you have a B before you have a T or whatever else it is, because this is for me to look, right? It's not for anybody else. So there we go. Will we get, anyway, and then the B is that A is been in place here, and B, I mean, this is in the trading system. It needs to be sequential in the trading system, and it is defined sequentially over here. But these are just signals firing and on these lines. B says that we closed. The open was higher than the close, and the close is within this, and the low is within this extension zone, or this zone here. Now, to have this be an accurate trade entry, it would need to have pulled back up here and tagged this little guy right here. This dotted line is the 1 point either side of the IB low. It would have needed to be like this. If we'd have gotten one of these right here, that would be a valid entry. All three rules and a valid entry signal for the IB low, IB continuation from the low side. That's my story, and I'm sticking to it, Bubba. What's happening with volume? Let's check while we're over here. Ooh, we're still hovering just below 100%. Our ATR is moving back from up here at whatever the hell we got to at some point, 6.5. I think I mentioned this at some point, but it's interesting to know. I thought it was an interesting statistic. In the last umpteen, I don't know how many government closures, the stock market has risen through each, up and to the right. They have any government closure has had no negative impact on the stock market for the last, 10 or something times that somebody had looked at this statistic. And some of them are, the last closure was, I should know these stats, so I'm talking out my ass here, but the last closure was one of the longest, 35 or something days. Look at us go. God damn it. Well, I didn't have a signal and I didn't take the trade. This is something that I need to now. A couple of things here. I never change my trade plan during the trading session. And this range requirement is something that I have thought about long and hard previously. It was a hard, fast rule. Absolutely. Without the range requirement, it was an invalid entry. That would have been an error. What happens with that is when you see, look at this. The range requirement says you've got to have a minimum of 3 points, or in other words, it's got to be an unobstructed path to the first risk neutral scale, wherever you have that scale set. Or in my case, 3 points. Well, these are, a point or less between each other. That's not the range requirement. This is rear view mirror bullshit, so be extremely careful about that, and I am very definitely so. I'm not a rear view mirror, IT, internet guru. Send me all your money. Well, send me all your money. I'll accept that, but you know what I mean. So here is, I'm vetting the IB trades. This is the IB low. The statistic has already been exceeded right over here, so the IB stat is now hot. The IB continuation or failure trade didn't work out very good. We come back down and test the IB again. Go lower, come back up, and can't get past the IB low. Typically, that would be, visually, that would be a trigger for me. Per my rules, this is something that I want to try to work out with Bookmap here, about Bookmap, and I'm thinking I can use this price level indicator rather than, this is just uses whatever CSV data I feed it. And currently I feed it the same CSV data pushed from IRT, which is the session prices, the same as these flags. I could make this indicator do any trick I wanted to do by pushing that data from IRT. I could push those same rules over here, and then I would have a line that would show me where the zone was. And it needs to be dynamic only after the IB, until the IB is, well, and no, wait a minute, it never needs to be dynamic because it's not a zone until the IB statistic is in play. So I might be able to just do them manually, a lot easier. Been a bunch of code crap in the background. I go down rabbit holes way too easily. Anyway, back to the point. We trade up there. That's the trigger, and down we go, and we get 3 points, and we're scaled. Okay, no, we get to 3 points, and we're scaled. Now remember, this is 57. Let's call it 57 flat, and say you were just the best entry person in the world, and you got short right there at 57. So you got to get to 54 for your scale. Right there. So you were now scaled. Now you've got your helmet on and you're looking for lower ground and hoping against hope. Or at least your trade's on. You followed your rules. You followed your plan. My problem is the fact that this did not follow the rules because, yes, the statistic was taken. That's A. B, we pulled into, just like here, we continue down into the zone, which is between 3 and 5 points. And then we pull back to within 1 point of the IB low. That is, in fact, really the trigger for the IB continuation short. Now, visually, you see, you get all excited about this. Well, what is that? That's 1 3/4 is all. Is it working out? Yeah. But that's not something you can bank on consistently, I don't think. That's my problem. Not a problem, but, you get the point. So where did we do that? Right here. What are we doing now? Down here and back up. Now, if we get back up here within 1 point of that, that would actually be a trigger for the IB short. And that should be represented over here. Now let's see. There's A. Here's our first B. And we haven't gotten up to our trigger. And this is kind of different because this is a 1 minute candlestick chart. I don't know what to do, whether to focus on trading from IRT or Bookmap or you know what I mean? That's why I'm relying on the backtesting, because it removes all discretion. It removes all errors of, oh shit, I didn't realize the scale was goofy on Bookmap or whatever it is. You understand where I'm going? I'm not looking to develop an algorithmic trading system that I can, throw on and tell our bank team how to come check on it daily, and Mom and I go to Mexico. You know what I mean? That's not the point. That's not my goal at this point. I guess that'd be fine if that worked, but I'm not delusional. delusional enough at this point to think that's going to be the case. But anyway, what I want to do is have the most non-discretionary representation of the following the rules specifically, knowing full well that if I manually trade this, discretion will have some enter into it. But one of the things I recognize and why I started focusing so much on the backtesting rules, no matter what my rule said, discretion was the key final filter for an entry, and that's not any good. And maybe, now let's get back to maybe these rules need to be changed, and that can be done, but you can't do 10 things at once. You can't change 10 things at once. You got to change one thing at a time in order to know the effect of it. That's why backtesting is so much easier, or so much more expeditious in getting these things lined out, because you can backtest 500 days in 3 seconds. If you tried to do that in real time, I'd be Methuselah. Ain't gonna happen. Not enough years left in my life to do that. So now we're getting back up here. Look at here. Here's our B. We're damn near back up to a trigger. This was almost the trigger for the IB short. Right there was almost the trigger. It needs to be within 6.5. And what have I done now? Well, I see one thing I've done now. I have screwed up my scale. I need to be 1 point high. I wish I could do this quickly. I'm sorry, but I'm a donut. There you go. Okay, it needs to be 1 point either side of the IB to have been a short trigger. There was our test into our level. Well, first of all, we had our IB statistic. Now we have continued down to the zone. We've pulled back to within, not quite enough. We needed to get to 56. We needed one more tick, and that would have been a valid short. And as I said before, the other day, I didn't adhere to the one tick, something as simple as that. I didn't wait for the complete rule. And I only noticed it over here. I only noticed it on this chart, and I got stopped. I took the continuation and I got stopped. So frustrating, Look at that, one more tick, and that would have been the short, and there's the scale, and your helmet's on, your feet are up, and you're dancing around, or trying to, setting traps for your wife to snag her when she comes into the office, or your gal friend, or whatever, significant other, whatever. Whichever floats your boat. I don't know what to say anymore. I don't even know how to refer to people, or it's just getting so weird. And they seem to be trying to roll things back to the 50s or 60s here with this. I don't know the point. I don't get what's happening politically and all that stuff. I really don't understand the methodology or the point of the current administration. I don't get all this stuff about, political correctness is officially here right now. What the hell? What's wrong with that? What's wrong with not being insulting to someone? I mean, I don't understand. I don't get it myself, but hey, I didn't get elected to office, so I got nothing to say, but you get my point. I don't understand what's going on most of the time. So I try to not comment on it and just pay attention to the here and now. Which brings me to, wait a second, not that, which brings me to this. Let's take a look at this. Well, there's our orders for today. I wonder if they have changed and added the non-farm back. No, they have not, because it's at 7:30. The reason I'm curious about that is I start the stream every day at 6. Jesus, I'm up at 6 putting posts on and stuff, but I start the stream at 8 every day with the pre-market and the definition and the how do you do and all the usual disclaimers about, trade advice and all that bullshit. Except non-farm payroll day, which I start the stream at 7:15 so that the non-farm payroll reaction and report is captured. Now, with the government shutdown, the non-farm payroll and any governmental reporting numbers have been removed from investing.com docket. ISM is not government, neither is S&P for tomorrow. However, financial use still has non-farm payroll in there at 7:30. I don't know why or how or something. So beat the hell out of me, in other words. Well, by one tick. A, B. One tick would have been a T, short, and kaboom. Also, B, trigger, kaboom. But no kabooms here. No kabooming at this juncture. I'm getting all kinds of bing bong crap going on here. I don't know what to do. Okay. I'm talking a lot about this backtest stuff because trading is, not doing much trading, and this is what's on my mind. This is what I work on every night into the wee hours and weekends and all this kind of stuff. And deal with on, in Static and with my other colleagues on the Discord. I have an RT, a risk neutral trading Discord channel. I don't know if that would be of interest. I don't know why. The fact that I live stream the entire day here seems to me to be enough. Look at this. Within one tick of the trigger. This is not the trigger because it's not within the continuation zone before the pullback. And I will credit this whole idea of the rules. This is, I will credit him, and also it's something to be sure you understand. This whole thing started from, I had coded up various different IBF, IBC things with different rule structures. And Rod, who is a very successful trader, good code guy, does a lot of statistics. He is the builder, owner, leader of Static, which is a place that I'm really fortunate to be part of. It's not public, and it's his, so it's none of my business to, invite anybody or do anything else. But he said, well, here's my rules for the IB failure. Price, in the case of the IB failure, would be right here. Price takes out the IB low, pulls back to within the 3 to 5 point pullback range, trades down to within 1 tick of the IB high, and then fails back into the middle. Same thing for the upper side. And I thought, now that's a really good idea to have a sequential set of rules that are meaningful to not just me, but a lot of other people. So I set about coding that up to come up with a trading system that follows those rules. That sequential application of rules. When A is out of the way, then B is out of the way, then T. Then there's the trigger and the entry. If we don't have a B or we don't have an A and the trigger is fired, doesn't enter a trade because it doesn't qualify. That's why I've worked and coded up this thing that you see here visually, and that is a visual representation of these rules over here. And it works pretty amazingly, and I'm pretty happy to do that. Now, the next thing that you can do with IRT, which I haven't fully confirmed that all of these rules are working over a long period of time, a 500-day backtest or 1,000. Once I do, you can then optimize. You must be careful not to optimize. Do I have a backtesting over here? Must be very careful not to optimize to a point where you're curve fitting, right? And curve fitting is really dangerous in trading or anything else, any other kind of statistics. It's real dangerous because it's goddamn stupid, right? I thought I had a back testing here. I'm looking for something on OBS, sorry. Oh, wait, it should be output does it, that's right. This one does it differently. I'm seeing. I thought I had made a chapter marker for backtesting, but I don't see it. And with this broken system now, I can't add them on the fly as I could before, so I apologize. Oh, well. Anyway. Back to the point. So, be wary of curve fitting if you optimize. The way you can do it with IRT so that you can optimize a strategy and then forward test it on new, previously tested data is as follows. You set up your back test to say work 500 days before the first of this year. And then you optimize that strategy and those rules. And then you take that optimized strategy and you forward test it over data not included in your previous back test and for which you optimized that system. In other words, you run the back-tested, optimized strategy over the data from the first of this year to now. That's a forward walk or forward test, and see how that optimized strategy from the last 500 days or 400 days plays out over the most recent 100 days. That's the way You do that. Now we are trading back up here to this, towards this 1 point again. Let's get over here to the markets and see what the hell we're doing. Okay. We have a fairly normal looking distribution in the NASDAQ. Not that I'm trading that now. Used to only trade the NASDAQ. Now we have basically 3 or 5, depending on how you want to count them, distinct distributions. Sorry. I don't know why I suddenly get a sneeze-a-thon going on here, but man, I'm one of those loud sneezing kind of guys. Wouldn't want to deafen y'all. Or, you know, break the speakers or something. So, any relevance here that we see? Well, we traded right down to the Globex low. There, the Globex meaning this is the low of the session starting at 1700 last night. In other words, the ETH session. That is Globex in my world. All right, what happened? Well, nothing yet. Was this a cup and milk stool or whatever the hell that thing going on here? I guess that's a cup and a saucer, or a cup and handle, or whatever they call it. I'm not one of those big. I remember way back in 1999 late 2000 when I first had moved back. First found out about trading and thinking it was a great idea in 1999. And I moved from Africa, where I had been living for about 10 years, to Coconut Grove, Miami. I was real familiar with Southern Florida because I had been a sailor and, had spent some time down there, and I enjoyed that water and the Bahamas and those things. So I moved back to Coconut Grove, nice ambiance, nice atmosphere in the 90s, late 90s. .com bubble just smoking. And I had no clue what I was doing, but I had enough money to be dangerous, and so I thought I was going to be a, George Soros Jr. or something, or maybe Paul Tudor Jones or somebody. And boy, was I wrong. Anyway, I got Steve Nissen's Candlestick book, and I thought that was just like some sort of secret code, all of these rising stars and bloated grouse and whatever else there are. A funny story about Steve Nissen too. I know somebody that knew him, and the truth of that matter is he did research the the Dojima candlesticks from the Dojima rice exchange developed by the samurai in historical Japan. I don't know, what years, in the 17s, I think, 1700s. And that's how they got, the samurai got paid or took payment, like a percentage or something of the profits in the rice market, in the Dojima rice market. That's where doji comes from. Anyway, Nissen researched all that and wrote that book, and I'm sure he's famous, and people still looking at candlesticks today. Steve Nissen couldn't trade his way out of a wet sack. He couldn't make $50 if his life depended on it trading. Pretty funny, huh? Good author. I think factual representation of candlestick stuff, but what I was told was, the real truth of the matter was he couldn't trade his way out of a wet sack. In other words, he was a forerunner of the rear view mirror trading internet guru people. Fun fact. So we've gotten up here twice. We were within one tick of our trigger in the backtest rules. And I'm sitting on my freaking hands some more. My wife's starting to look at me funny, like, what do you sit on your hands a lot for? But I firmly believe in this environment with the high potential of unrecognized critical political risk, say that fast, that we have now, that in recognition of a trader's prime directive to be protecting and compounding your account, which the first and foremost method to do that is risk management. You should only be focusing very specifically on your rules and on only taking A+ trades. Looking back in history in the rearview mirror, hell yes, man. I saw this up here and I got short and now I'm a happy camper. Well, no, I didn't. None of that happened. I don't trade the VPOC migrations. That is a very well-known setup. Tom and I don't know who dreamed it up first. For me, it's one of the worst. And today it would have worked out pretty well if you took it mechanically. And it's just real simple. Remember the definition of the POC. It is the price at which the most contracts have traded in the session. What does that mean? Well, it's the price that most traders thought was, okay, I'll trade there. Fair price, retail price, I don't know, pick one. The mean, the mode, whatever. Well, I've never had good success with that because obviously you can't miss the yellow brick road moving around here, right? Can you miss that that's a VPOC migration lower? No, you can't unless you're, visually impaired. But that's not the point. That's just like the IB statistic or the IB trade. It's real simple to see when the IB stat was taken, but what are the criteria, the specific criteria that validates or confirms a valid entry for that trade? That's the part that matters. Do you, when there's a VPOC migration, do you have a 1-point pullback? Do you, if it's more than 3 points, do you pull back to the previous? You know what I mean? There's 1,000 different ways you can look at that. And I'm not saying any of them are invalid. I'm saying I don't know. And my data previously, taking these mechanically, was getting salt pounded in my ass. I had terrible results. Today, okay, VPOC migration, boom, you get short. What happened here? So you're short at 64.75. It pulls back to 66.5. Real close. You got 1 point left there, and then it breaks your way. So you're scaled, and now you're risk neutral, and you're a genius. Or do you wait for it to trade through it, pull back up to it, not be able to get anywhere, and get short? You know, that's where the questions come in. That's where the rubber meets the road when it comes to trading. And here, this did not reach my trigger zone by 1 tick. The trigger is within 1 point. And from the bottom side, greater than or equal to within 1 point of the IB low. So within 1 tick, this would have been a short trigger in my mind and on my rules and my backtest chart and all that stuff. And wouldn't I be a genius? And ironically, I mean, in reality, 55 to 51, there is the range requirement also. So all those things added up, except for 1 tick. It would be scaled, and now you're waiting for it to break the lows and keep going, because if you got let's assume you got in. Oh, there's a VPOC migration again. Okay, let's watch this one since we're talking about them. Oops, damn, I gotta stop doing that. Complete VPOC migration. Okie dokie. Now this, and let me just quickly say that these flags I started doing long ago when I would only have my chart at 5-minute increments. And you see that the VPOC migration scrolls off the left of the screen, so you don't see where these were before. That's where Blue Boy came into being when I realized that the session was important to have a feeling for context. What is the context today? Short, isn't it? And if you notice over here, we closed the gap, and by God, we're going to get pretty close to trading all the way across the charted value area, even though we agree there is no value area in a trend. But let's go. This is, somebody said something right there, that's for sure. That's a news comment driven something right there. But back to the point, one tick away from the trigger for my IB continuation trade, and I still don't have any good feeling for the for these IB or these VPOC migrations. And whatever happened down here, who the hell? Somebody said something right there at 10:38. I don't know if there'd be any news we could look at. Let's see. What is it? 10:30. I don't see anything. But that isn't, that certainly doesn't mean anything. I don't see any, earth-shaking deal here. I don't think that the bond auction had anything to do with it. Maybe. I'm not smart enough about that. I know that yields, bond prices and yields are inversely related. When the bond price goes up, the yield goes down, and vice versa, I believe, after I said that. And the bond market is how we finance our debt. We are now spending a huge percentage of our yearly budget on interest for our bonds, for our debt in America. And it's pretty staggering. So here we had a VPOC migration lower. Somebody said something and they fell out of bed. Now we're going to trade back up. And what would you do here? Wow. What would you do here? Would you go short right now? Would you wait for it to trade up here to these levels and go short? Would you be looking for a price check at aisle 3 to go short? I'm not saying I know. I'm asking, I think, valid questions. If you're going to make a trade based on this VPOC migration, what the hell would you do? And then some clever dickhead will say, well, I got short over here at the first one, and so I'm well in the money and I don't care. Here's another confirming thing that the full session VWAP is also migrated down there. And remember, the VPOC is just the price at which the most contracts have traded so far in the session. So somewhere in here, in the range of 82.72, the second, this price right here at, trades at 82.73, this yellow brick road is going to move up there. It's that simple. You can look like a real, Gandalf if you want to try to BS people and, well, we're going to have a VPOC migration to such and such in the next few minutes. I can feel this coming. It's just math. Look at the numbers over here. That's all there is to it. You can tweet something and everybody thinks you're a wizard. Well, let's see what's happening over here in backtest world. Well, there's our A. There's a B. There's no trigger. There's our oh man, this is really disappointing right here. There's A, there's B, and there's within one tick of the trigger. If that had thrown a T, a red T, that would have been a confirmed trigger short for the IB failure, IB continuation off the IB low. Oh man. So there you go. Frustrating, huh? And I'm really disappointed that I broke my system by combining them. I broke my IBC by combining, combining them. You'd think after all these years of speaking English, I'd be pretty good at it, but oops. Maybe not. Maybe. Yeah, so from a trading point of view, nothing to do here, nothing to see. Nothing to see here. That's about as close as you can get right there. Boy, would have that been a nice one, eh? That's the way you want to see them happen. Trigger, and then you're short, and boom, bitty, boom, bitty, boom. You scale, and now you haven't gotten past your scale, but you're, you got your helmet on and your feet up and your cool drink there, and you're all set to watch the market happen. Because you have very definitely not stopped out or even gotten any heat whatsoever. And here we go with another VPOC migration dilemma. I'm not going to be doing that, but looks like this ledge right here is having some support effect on the market, isn't it, from yesterday? I hate ledges, to be honest with you. I never know what to think about them, whether they will hold or be a break. It's kind of like big liquidity. Is it a magnet, Or is it like a lid on the pot, you know? This is a movement here that is something I'm going to look into. Rod, I believe, has pointed it out, and I'm not sure how he's using it, but it does make sense. When the VPOC migrates within a minimum of 3 points outside the IB high or low, that says something about what the market is doing, right? Remember that the IB high and low are just the high or low of the first 1 hour of the RTH trading session. So that's where it's contained. And then if price and by definition, the VPOC, the volume point of control, is the most traded price so far in the session. And here we are at 10,144. Now, we all know that the minute one of these other prices, like up here, trades 10,145, this yellow line is going to move there. Everybody knows that. But it's significant that we exceeded the IB low and now our most traded price is below there by a substantial amount, 56, damn near 10 handles. They used to say, and I'm not sure whether it's true or not, that the IB, these kinds of movements outside of the initial balance or that first 1 hour of trade is more driven by the higher time frame. Take it for what it's worth. I'm just throwing them out there. It's worth pointing out here that had we gotten the trigger for the short, one more tick, there would be no heat, a scale, and let's see, let's call it 46 or 56. So there's 46 is 10, 44 is 12. Right there is our 48 tick or 12 point take profit target 2. That trade would have been a complete raging and success. Yeah, don't know. Achieve that trigger right here that we missed right there. But I'll be real honest with you. I don't know what to think about that at this point in time. You know, we've had the VPOC migrations lower. We've traded way down to a new low. Are they rotating back? We're at this low volume node right here. I don't know whether to think that's a trade or not, to be honest with you. I guess what I'm saying is how closely should the triggers be aligned? For example, if we got an IB high or an IB statistic, then at 9:35, and then we get the B trigger at 11:35, and then we get the B signal at 11:35, and then we get the T at 1400. I don't think that they're maybe valid anymore. I don't know. That's one to think about, and I'm thinking about that right now. Had this happened right here, that would have been a clear short. Is that going to be the case here? I don't know. I've got to think about it. Excuse me. And let's look at the signals here. So there's an A, a B, another B, and now we're getting the triggers way over here. I'm not sure if, an hour and a half or 2 hours apart are they still as relevant? I don't know. And believe me, if anybody would love to put on a trade and get scaled and or T2, it would be me. You can't even imagine. But I also don't want to step on my proverbial junk because I'm very aware that I very definitely would like that to be the case. And let me just point out that this is 56. So say we shorted right here. The minute we touch up here, that's a stop. Well, it would seem that I missed my opportunity here. Not sure who would see that coming. But this was definitely the trigger. 56 to 57, boy. Oh, no. Would have been a stop. No, it wouldn't. It's only 2 points. Yeah, okay. Yeah, so now scale and disappointed. Not sure. What are these things? What's the deal here? Is the market thin or? Oh, volume is up. Volume's now over 107%. Same time of day. I'm not sure if there's new news happening or what the hell is going on. This is a classic example of not eating my own dog food. Overthinking it, don't know. I do. That is a definite condition that I've thought about, which could be coded. At what point is a signal not valid? You know, at what point is the trigger signal here not valid against the IB stat and then the pullback range and all that stuff? That's a question I've fumbled with a lot to do with these VPOC migrations. Everybody knows that the 11th commandment of trading is thou shalt not diddle in the middle, which is the POC. You don't take trades from the POC or the middle out, because what is the POC by definition? It's the most traded price, the most likely price to have rotations, the most likely price, i.e. to be stopped out. It is also the most likely price to be returned to from an extreme. That's the whole principle or premise of a mean reversion trade. You are outside in, reverting to the mean. But back to the point, at what point, at what kind of time parameter or whatever, is it no longer a mean, a VPOC migration, but rather it's a diddle in the middle? That's a question nobody's been able to answer for me, and I've asked a lot of different people, and I certainly haven't figured it out. I mean, it's something I think about, but anyway, I should have taken, I guess, eaten my own dog food and taken that, if not that, this short, scale, helmet. Now what? And it doesn't, in my world, as long as I can get that scale off, that's okay with me. At this point in this progression of trades and this progression of the account, that's my That's a biggie, you know, that's a big point at this point for me. By taking that IB continuation improperly into last week and taking a stop, now I need two more full these IB IRT 2-lot trades to take all 5 of these accounts to XFA. Last week when I had put that continuation on, had I waited for the signal and gone short for the failure, all 5 of these trades would be past the XFA. It's probably also worth pointing out that none of this risk neutral trade setup that I'm trading now would be proper risk management on a funded brokerage account. Because you should never risk on any one trade, you should never have more than, say, 3% of the account at risk. Well, even with this 2-lot trade, oh man, the risk is $300. So it would depend on your account size, right? That's the maximum risk on this 2-lot risk neutral trade. And I have a 2.6 basically profit factor. So for every winner, I make about almost 2.5 times the loser. So that is a properly balanced or properly skewed risk to reward, or R. I like the R values. I have my R value is 1 to 2.5. One risk, one R is your stop, right? So 1 R is 12 ticks times 2, remember, because it's 2 contracts. So if you're going to do it in dollars, it's $300. And the profit target with both is 750. So that's 2.5. It's 1 to 2.5. And that's a sustainable. That is sustainable. Something that is really important, I think, to understand. And I'm going to try to find the hotkey for it. Hopefully these are working. I don't know. So disappointed. I hope this kid gets his act together quick. Andy. The point I was going to make here is that win rate is clickbait. That is internet crack, and useless, taken by itself. I can have a 90% win rate and go broke in 10 trades, blow my account in 10 trades. If your risk to reward is upside down, that is the key. You need to determine your expectancy over a statistically significant data set. In other words, over 100 trades, I can expect to achieve T1 60% of the time. I can expect to achieve T2 75% of the time, or whatever it is. I can expect to have a scratch 20% of the time. I'm just throwing numbers out there and not adding them together. You know what I mean? Or I can expect to stop. If I achieve T1, then the worst that can happen is a scratch, right? and if I achieve T1 60% of the time, that means 40% of the time I could have a stop. Not necessarily, because you could have a scratch. No, T1 would be a scratch. You could also go on to, adding up T1 and T2, then subtracting. That's how you do it. And the way you calculate your expectancy is the way that you can make win rate be meaningful and not just, internet guru clickbait, is to calculate your expectancy properly. And that is done in the following way. Win rate times average winner minus loss rate times average loser. That is your expectancy. And you calculate that over a statistically significant subset of occurrences or data. Not 5 doesn't work. Today doesn't work. And because that's outside, that's very definitely within random distribution. And the thing about random distribution and making sure you've got that statistically significant data set is you could have this is probably the biggest danger. Oh, well, maybe not. You could have the most successful setup in all recorded history. And if you look at a small data set, and the random distribution, which is perfectly normal, is skewed for losses or stops, you could throw that fantastically profitable trade setup out the window, because this thing lost five times in a row over 10 or 20 trades. Well, over 1,000 trades, it won 90 times in a row. That's the possibility. That's why you want to be sure and be outside. It's just like the coin flip. You flip a coin 10 times, it's 50-50, and it comes out with 7 heads. You go, this coin's no good. Well, of course it's good. It's random distribution. Flip it 1,000 times, the law of large numbers applies, and there you go. Well, 1, 2, buckle my shoe. I am not going to take the short right here for the following reasons. It is outside what I think is and I've got to really just talk to some of the guys about this and think about it. The time relevance of the signals, and also what's going on. Well, we have higher lows and higher highs. Has the tanker turned? Here's that big ledge. Here was the POC before the shift. Are we turning around? We have traded down. We're establishing a more balanced. If we rotate around here, we'll end up with a very balanced B-shaped profile. B-shaped meaning long, suggesting long liquidation. And remember, this is all just me talking out loud to myself, because the only way I can get data into this stream, which is my virtual journal, is two ways. I have the video, which is captured from my screens, and I'll point out, I capture the entire video, including any open programs you can see at the bottom, the clock to the second, and the date. So there's no questioning transparency or accountability. However, the only way I can get any insight or get the data into the stream of what I was thinking at the time, my reaction at the time, is my voiceover here. That's why the incessant narration. And another reason, actually, why I use OBS and stream to YouTube is because Bookmap does a phenomenal job of copying every tick in the market and every move you make with your mouse in terms of an order or not, and even it captures the P&L and does all those things. But two issues. Even if you're only using Bookmap, there is no way it captures or records what you're thinking, which is the big, the key piece. And in my case, it doesn't capture, of course, what's going on my other monitor over here with IRT. Now, I've got this in front of me here at this stand-up desk is a 4 monitor rack, sorry. The two lower monitors here are 32-inch 4Ks that I have my trading systems on. The upper two are a separate machine, and they are 27 high defs. I monitor the stream and do whatever else. To my left, on my other stand-up desk, which is there in an L, I have a 27 high def vertical, and that's what runs OBS and my timestamp hotkey legend and all that. And then further around the corner, that's on the same trading machine. And then further around the corner is another 27 high def, or 32-inch 4K normal, landscape on my third computer in here. My old Dell workstation beauty that I've had since 2015. Bought it in Kuala Lumpur. I lived over in Kuala Lumpur, Malaysia for 11 years. Loved it. Moved to the States once we finally got visas for my wife and daughter in August of 21. Never dreaming what would happen to the country and where we are now. Pretty surprising. So let's take a quick, geez, 11:30 already, son of a gun. Well, the Rod came up with a good thing that I like a lot, and that's he took the total minutes of the RTH session divided by 3, and we call it RTH1, RTH2, and RTH3. So RTH1, 8:30 till about 10:45, and then, RTH2 and RTH3 into the close. After we get past RTH1, my spidey senses for trades kind of falls back because of the things I was just talking about a minute ago. We had our IB statistic. Ooh, right. Come on now, blue boy. just make this blue guy a little better. So here was our IB statistic right there at 9:33. Remember, the IB sets and is a thing at 9:30. The statistic was taken right there at 33. It was revisited and in fact exceeded to the downside. Then we had this pullback. We came down, retested, did a bunch of bouncing around. Didn't have, per my trade plan rules, did not have the triggers. The only trigger we had at this point was the IB statistic, so that's A. Down we go, up we go. We got a couple of triggers here. There's one. Guess there's only one. Where we pull back within 1 point of the IB low. And then maybe this is one. Then we traded down to and into our pullback zone, and that was B. That's the second rule. The third thing would then be the trigger, which is to retrace to the IB low within 1 point. Now that's what we didn't do right here. There's our trigger. There's our B. Here is within 1 point of our trigger, which would have signaled to me short, and I would have taken, because look at the proximity. It's boom, boom, boom. The rules are working in close proximity and with each other. Then we come down here and fluff all around, and come up here. Then here, and then back here, and then back here again. These are all the trigger by definition, because prices pulled back from the low to within 1 point of the IB low. 1 point lower, within 1 point below or above, actually, is what the rule says. But I start becoming less interested in taking the trade when we're an hour and a half or 2.5 hours away from our other rules. Even though, had I gotten short, taken the rule and gotten short, I would be scaled. But so what? And that's, and here we are. There you have it. There they are. And here are those. Here's what I'm talking about. A. First rule. B. Within 1 tick of the trigger. Now, this is not any, fantastic runaway trade, but it would have been scaled and very definitely would have gotten to your second profit target down here. And no heat. But it didn't generate the trigger by crossing this little dotted line or equaling or crossing the dotted line. Now all up and down and back and forth and all around. And finally up here we do get a trigger. But how do I deal with that? And another question. So now here's another B. And then there's then we come up to a trigger. Do I look at these as a group, as a rule grouping or set or trade grouping, and taking that B and getting scaled and not getting any further? I don't know. I'm not saying I know the answer to these questions at all, but in keeping with the purpose of the stream, I'm thinking out loud. And one of the things that's interesting about this is when I go back and review it, specifically the trades, I think, sometimes I go, what the hell was I thinking? Well, when I'm narrating it like this, I can I can hear what I was thinking. That's the point. So you see how it works. Just to give you a feeling for how much more streamlined and advantageous backtesting is to try than trying to determine this manually. Even just having lines on your chart like this and scrolling back and keeping some notepad or something of how many trades you got, positive, this and that, and something else. Let's do an example here, and I have no idea the outcome. This is 500 days back, RTH trading session, 2 contract. Ooh, 2 contracts. That's important to have correct. And the reports that I want, override the session with this one. 500 days. This is the full, these are IB short and long from either the, in other words, this is the IB continuation, short or long, and the IB failure, short or long, meaning that, you know, an IB short continuation is from the IB low continuing. An IB long, an IB long, IB continuation long would be from the IB high continuing. IB failure short follows the rules and trades up and comes back in. IB long, IB failure long, other way around. Boom. You got it. 4 trades. Back test. Ready? 500 days. 4 possible trades. 2 of each around the IB high and the IB low. There you go. 5 seconds. It traded 493 days, 1 symbol. Net profit was 52,812. It took 369 trades, 181 long, 188 short. Pretty cool, huh? Here is another metric that's real important. Largest loss was $300. The largest win should be 750, and I know right there, I know this problem, and I haven't had time to look into why. This is for May 1st. For some reason, it enters the trade, it takes T1, and then rather than taking T2, it goes to the end of day, and I have to find out why. I'll be the first to admit that. So this would be using this as strict statistics. I would throw this out, but let's just, for the sake of this demonstration, here's our 369 trades. 132 were winning, 117 were losing. What is that? That's 249 trades of 369. Meaning that the balance of 100 and change, 10 or something like that, are scratch. In other words, we took T1 and then we took a stop. We have a profit factor of 2.23, and our profitable trades of the entire set is 35%. Stop and think about that. So you had, with a 35% win rate and a 2.23 to 1 profit factor, over 369 trades, you make $52,800. Nothing to write home about, I guess, but, be better than a sharp stick in the eye. Now, here's the real beautiful part about this system, about the way Chad coded it all up, I think. Come on. There is each and every trade, entry type, outcome, particular profit, cumulative profit, the entry time, the exit time, anything, any and every parameter by date going back to November 3rd, 2023. At 13:10, we entered the IBF short. 2 lots, we took a stop. 300, full stop. And you can do that for every one of 362 trades. The thing I'm finding here, I want to be real careful about. Here's an IBF short, T1, T2. One thing that I'm not seeing that I think is a problem are the IB continuation trades. There is one. Here's one. Short, T1, scratch, stop. This IB continuation here are the ones that I recoded and redid the value, the user variables for, so that I could combine it with the IB failure trades in this one-stop shop IB trading system over here. And that's, I think therein lies a problem. Here's an IB continuation short. We get T1, we get T2, so that's okay. $650. Down here somewhere, I will spot this is wrong. This has got to be end of day exit. Yep, that's exactly right. This is an end of day exit, 1100. Why didn't this exit the trade with T2, which would be before, which would have occurred before $1,700? Because T2 is only 48 ticks or $600. So that's an issue. I've got to figure out what exactly happened on the first, January 29th. Well, I can tell you what happened right there. That's a short day. Yeah, and here's the problem. You see this? No. 9:45, and 2 minutes later, you get the stop. Or the target, and then at 14:30 you get the end of day exit, which is crazy. And the problem is this is a short day. Now I try to remove those, but sometimes they don't get there. I need to put a piece of code in that eliminates half or partial days, even though that data has been removed. Now, here's our famous $3,187. Okay, I can promise you this is May 1st. And look at there. May 1st at 13:42. We enter short. At 14:19, we take T1. 14:24, we end of day stop with $3,187, which is complete. Oh, wait a minute. Oh no, yeah, which is correct. That's right. Which is bullshit. This has to be, T2 has to be before here. There's no possible way that can be the case. But you can see, and you can go to the chart and you can look at all this. Another handy thing you can do with IRT, with this backtesting engine, and this system the way Chad built it, if I want to, I can send this backtest to the chart, and it will graphically display Not completely accurately because it's not really set up to do the calculations for total of multiple contracts. I mean, multiple entries or, positions. But anyway, it'll definitely show the entry, whether it's, drawdown or positive, and what the final result is for each one of them. So you can go back and look at the graph at each one of those trades graphed on the chart. Also pretty handy. I don't know why I can't seem to get this damn thing to be shorter. I thought it was just a simple matter of grabbing the top or the bottom and pulling it up. And that's how it usually is, isn't it? But for some reason, I can't adjust the height of this all of a sudden, and I don't know why. Little stuff that just irritates the shit out of me. But there you have it. And that's why the backtesting engine is so, in my opinion, so important, because you in 5 seconds you can do 500 days of four different directional trades around both IBs. Yeah, it's phenomenal. And what's happening now? Well, that trigger would have been a good one, I guess. But then we wouldn't have gotten stopped. But anyway. So I'm going to go outside and rest my eyes, take a walk around. That's real important. Get some ultraviolet. Get used to natural light. Focus down the horizon. That's really important. Taking care of your eyes. Stop and think about it. The most important tool you have in your trading world is you. It's that person on your side of the monitor. Your eyes, your brain, are you on tilt? Did you get a good night's sleep? Are you hydrated? Are your eyes, falling out of your head? And if you want to do this long term, you better start taking care of all those things now. Don't wait till you're my age and go, oh shit, boy, my eyes are bad. I better try to do something. That's like slamming the barn door after the horses are over the hill. So that's a piece of advice. And another thing I will recommend that I do, which again is absolutely not conducive to a interesting action-packed stream, live stream, but is very conducive to preserving your account and growing it by compounding your account. And that is that if you have a question, as like I've just been talking about, the relevance of the proximity of the signals, for example, always error or choose the caution. Error on the side of caution. You're not killing snakes. You're not a gunslinger. You're not a gambler. I'm not any of those things. So if I have a question about, well, let's see, which I've just been talking about here, huh? Here's A. Here's B. Here's another B. Here's a third B. But between this B, we did have a trigger here. We wouldn't have been stopped because these are just 1, 2 points, right? These dotted lines are 1 point either side of the IB. So if you even got short on the first trigger, right here, there's no way you're stopped out. You're scaled. You may or may not have gotten to your target down here. I doubt it. Was looking just now. The disappointing part, but it's trading. We were within 1 tick of the trigger right here in sequence. Boom, boom, boom. All the way to the second target and no heat. But if there's a question there, very definitely do not err on the side of being a gunslinger and trading, in my opinion. And remember, this is my stream talking to myself. I wish I could find that. Let me see if I can find a screen snap. Maybe of that trade. But I don't have a copy of. I don't have a copy of. Oh yes, I can illustrate that this way. And sorry, I just realized I hadn't thought to do the music thing, so I'll do that in a second. Drop a thumbs up and something in the chat there. I used to have a couple of pretty active chatters. That makes it nice. Trading's a lonesome business. So here we go. God damn it. What are we looking at here? Something? Here is a trade from the 25th of September at 11:01 is when I took the snap. The trade was right here. This is the trade I was talking about where I did not follow the rules properly for the IB continuation trade and took a stop, and then I hope I have a snap for the, and then the IB failure was magnificent and triggered and signaled perfectly with my rules. So if you can see this, I hope. Here's what here's how Bookmap treats a trade. There's all the stuff about it. There's the outcome because it's over with now. There's the entry, there's the stop loss, there's T1, T2 is just up above us here. I think I might actually have that. There we go. So T2 is just up above us here. This is what happens while you're in the trade. It's just been put on, not stopped out yet. We got a bar trade going on here. I'm not thinking that's all groovy. You see that it was a 2-lot position. There's the average price in. I've got orders in to sell 4. P&L at this moment was 2 points, or ticks, I'm sorry. Whenever I took the snap at 10:48:21. All right. But you can see T2. You can see T1. You can see the entry price right here. You can see this asshole iceberg right up here. And you can see the stop. And you can see the IB. So now let's analyze this. Analyze this. Way back over here, off the screen, we took the IB trade. The IB statistic. Oh, no, we did not. This is the IB statistic right here. Excuse me. It is 10:44 and we had not taken the IB statistic yet. Of course, it was active from 9:30. We took the IB statistic. We traded along here. We pulled back. We came back up. We went up. Now, remember that the lines, the IB continuation is this zone. It's the same, it's just reversed down on the bottom side, right? This zone this is the IB high. This zone is 3 points to 5 points above the IB high. So we trade up through it. We do some magic business. We go back, we trade up into the zone, and then we pull back to within 1 point either side of the IB. This little dotted line on both of these is 1 point above and 1 point below the initial balance, in this case high or in this case low, okay? So the proper rules would say that we take the IB, that's A. B, we trade into the zone. And then we pull back to within 1 point, and that's the trigger to go long. If we don't have B, we don't have the sequential rules for the trade. We could then have, we trade down, sell back, we come back inside the IB to this pullback zone, same thing, 3 and 5. We trade up to the IB within 1 point, and that's an IB failure, short. Okay. So this profit target, or this first profit target, is 3 points. What does that mean? That is the bottom of the zone, the continuation zone that is a requirement. This would trigger the rule B. Well, guess what? We did not get above 3 points. We got a couple of ticks below it, just like today. However, we came back down, we came up here, and I took the long. And what happens? We get stopped. Now, what's the next thing that happens? Well, just remember that this is 3 points below. Stop. And this is 3 points above. So this is the top edge of the IB pullback zone. I got stopped right here. Forget that. We pulled into the pullback zone. We traded up to the IB high again. There's the trigger within 1 point. Either way, there's our trigger to short. IB failure. Back up, nothing. Oh, goodness. Nothing. Boom, 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 boom. well past our 2-point or our 12-point T2. Simply by being a, impatient, premature trader, where we didn't trade into this continuation zone for rule number 2. We got stopped. We did trade into the continuation zone for rule number 2 for the failure. We test back up to the zone. There's a trigger. We go short. Boom, boom, boom. No heat. That's the difference. That's the trade that Garrett was talking about a minute ago in the TLab. In static. So, what's happening now? Beats the hell out of me. I think when we start getting these tight consolidation rotations, that all bets are off, actually. I'm kind of thinking that means we're not trading anything, I think. So here's the blue boy. There's one tick high, 1 point high. And yeah, you can start looking at any of this crap and start making up stuff like any good internet influencer would do. And, tweet hell out of it on whatever that's called. Twix or whatever it is. Is any of this, a lot of what I'm saying here is based on my backtesting, years of analysis, and what I hope is statistics and, sound thinking. I'm sure that there is irrational kind of emotional stuff filtering in there, I suppose. I think I'm a human pretty much like everybody else. And I'll kick on the music. I forgot that. Sorry. Oh, boy. Boy, oh, boy. I don't even see any. I don't even see any. I don't even see any. What do you call it? Blonde gal there, Levitt, or what's her name? Yeah, the press secretary lady person. I don't see her doing anything either, so there you go. So I'm gonna head down the street and back, get my eyes a rest, and then the cats have had a family intervention and have insisted that I go take a shower or they will boycott the office. Have a good lunch. Remember, the 12-to-1 stats would not be in play because we are fairly imbalanced today, or whatever that's worth. Keep your powder dry. This is a crazy environment. All right, so what happened? Same shit. Ooh, and now we're migrating back up. So everybody that got excited about this VPOC migration short didn't get right on it and get scaled has been stopped and more stopped and stopped some more. Now, what is this little dipsy-do right here have to do with Mr. Backtest boy over here? Do we know that? Well, first we got to get over here to the current thing and get scaling right. I'm sort of the opinion that having the signals fire in sequence is important. I'm also really freaking disappointed about this over here. Here is the converted IBC trade. Which I can have converted to my second. Let me say something about the way these rules work. And this could be really obvious to other people, but it wasn't to me at first. I am building this trading system called Risk Neutral Trading IBC version 6. And the way you build a system is you add rules and then you build each specific rule. Right? Like, for example, that one. There's the rule that happens with this criteria. This is what in fact sets the parameters over here of the pullback zones for the continuation trade. So it would be this one and up. Come on. And these two. Those are the continuation trade ranges. This is minus 12 ticks, minus 20 ticks, plus 4. And so this takes care of this one here. Minus 12, minus 20 from the IB high, and then 1 tick either side, or 1 point either side, 4 ticks either side of the IB low. So this would be the IBC short rule, okay? Then, if in any other rule or system you add this short variation thing, which is it's a V. I started to make it something and I got the name wrong. V pound variable, IBC short V pound variable. If you add that, for example, here, you notice that there is the IBC short variable. And if we look at that, it should be exactly the same as it was on just the IBC trade. The problem is that you may not recognize, if you edit this rule right here somewhere, the rule is edited. meaning that on the IBC trade or anywhere else that rule is used, those changes are now there also applied there. So they may completely break what you were doing. So it's probably obvious, and that's why you see different rules. I try to be specific and change everything, IBC, IB short, blah, 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 blah. My thinking in building in converting the IBC, I needed to, I had reused VPound variables in both the IB continuation and the IB failure individual setups, because I would run one and at another time run the other one to backtest. The conclusion I came to was that it would make more sense to have an IB trading system, which would look at IB low continuation, IB high continuation, IB low failure, IB high failure. So you would have a failure and a continuation for each IB statistic all in one. That requires a lot of stuff here. And have each one of them use these sequential rules. 1, 2, and 3. In other words, the IB statistic, and then the pullback range, and then the retrace back to within 1 point. So that has to be coded for each one of them. And another thing you've got to do in IRT, at least that I know of so far, you have to have a complete set of rules for long and a complete set of rules for short, and as well as an entry type for an entry for the IB failure short, the IB continuation short, the IB failure long, the IB continuation long. It's not like Bookmap where you can set up one multi-bracket that says I'm going to have a 2 contracts with a 12-tick stop. And the, whatever they call that, add-on or whatever it is, plug-in or whatever it is, for the multi-bracket, is smart enough to know if I am going long or short, and it reverses the sign, makes it a negative or a positive. You got to do everything manually over here in IRT. Which is fine, you just have to know that. And there you are. And now I will capitulate to the family intervention from the cats. I tell you, it's really a great thing you should always do besides exercise. Every hour or two, go outside. Hopefully it's sunny and pleasant, and relax your eyes, looking down the horizon, looking off in the distance, and get some UV and stuff into your brain and absorbed into those cones. That's a huge scientifically proven fact for eye health. When we are staring at these screens like we are at a fixed distance, your short vision focus muscles stay locked to focus on those numbers and that what you're seeing. And it's like, clench your fists as hard as you can for 5 minutes and see how your hands feel. Try doing that for the total time you're staring at the screens. That's why going out and relaxing those is really important. With that, I leave you for the shower episode here. I'll be back at my house. So what are we doing now? Now we're building out that profile like I had suggested earlier. We're going to have a B-shaped balanced profile here. Okay, well, I'm going to grab something to eat. God, it's 1 o'clock already. Normally, this is when I come back. Okay, well, you know, keep the home fires burning, and I'll be back pretty quick. Didn't realize it was 1 already. 1300 here almost. Oh, well, okay. Late lunch there. We're in the power hour. Looks like we're having a little, yeah, we're going to continue to just build out this profile, I guess. Well, they keep it up. We'll get right back up here to the where we started. Right back at yesterday's high. And I thought it was frozen. I stood here staring at this for a second, and I didn't see anything moving. Crazy. Well, they continue to keep the investing.com continues to keep the any government data off the docket for tomorrow. But Financial Juice has it on. I don't know. I don't know what to tell you. So we're looking at bailing out farmers. For billions of dollars here. Which need bailing out because of the tariffs and the policies that they put on. I don't really understand it. Using tariff revenue to bail out farmers. Christ. Okay. I wonder if that's like the ultimate oxymoron or what. Well, I don't know. Pretty strange. Strange days we have, boys and girls. So yeah, I'll try to confirm that the stream will be up at either 7:15 or 8 o'clock as usual for the total day. Looks like things are putting along. If I could just get the nothing really big on your side, but out of the monitor, but on my side, these chapter markers and the timestamps is really important for the stream. Hopefully that'll come right here pretty quick with YouTube or OBS. And I'm not going to risk rolling back my OBS. And you know, one chapter marker plugin that's not working now is not worth jeopardizing all the settings and everything I've done to make sure that my Shure microphone, Shure M7MB here is going through my mixer, and the mixer is feeding through on a couple of different channels to OBS and then other stuff. I think it's I think I need to weigh the potential risk against the potential gain. Don't want to cut off my nose to spite my face, you know what I mean? I am sorry that I updated it, but that's where it's at. So we're right back to whatever this line is that everybody thought was pretty damn important. Oh, look at here. It's the previous RTH high. We've come right back to the high of yesterday. We have still not taken out, believe it or not, the overnight volume point of control. Got within one tick of it, but we didn't take it out. So there's an 80.9% chance looking backwards over 2,000 days that this is revisited. That means that there's a 19.1% probability that it will not be. And I guess this is going to be one of those. So I'll try guess we'll just have to go ahead and look at a recap. What did we do today? Well, we opened gap up. We immediately closed the gap within the first 10 minutes. And then we plowed down to, I don't really see any meaningful area there other than a, not really. Well, let's see here. I don't know. You know, here's our low today. Kind of the high day before yesterday. You know, that's pretty much grasping at straws, I think. You can, you know, humans are really, really good at finding patterns where they don't exist. That's one of the big problems a lot of people face. So yeah, we had VPOC migrations up and down, or down and up. We're right back here at the previous RTH high, which was the RTH all-time high put in yesterday. We did not reclaim the all-time high up here in the RTH session from the ETH boys and girls who put that in there overnight. Now, we're not done yet, but there you are. So here's our bigger picture. I mean, maybe easier to see. The NASDAQ market profile and micro composite. Volume is hanging in there around 90s. Never got a, I think it did once get to 110 if I remember right. And the ATR, sorry, average true range. This is the backtesting story we talked about at length. And micros. There's something I wanted to make sure of. $12.25. That's the MCVPOC as it stands right now. Well, I think I won't. Just want to be sure that I've got that on my micro composite column for the RTH or for the book map here. Let's look at. I don't think I do, to be honest with you. 67, 12.25. Nope. Boom, boom, and that was put in on yesterday, right? So that was 0110. Oh man. Oh man. Just above the low, isn't that something? You would think it's right there at this high volume node, but There we go. I can get rid of all these gaps and traps and crap that's happened. That's no longer the case. I changed. I was hung up with backtesting and skullduggery here a while ago over the weekend. Okay. And a little drop here for whatever reason. Anyway, let's continue on here with the wrap up. We're going to have a continued at the close. I'll bring this micro composite volume profile to encompass this. Where we will have a new all-time high. In the RTH, there's one higher in the ETH, but you got the point. Don't know what we're going to do with reports or not. All I can say is subscribe and hit the little bell thingy, and then you'll know whether it's going to be it'll be scheduled whether it's coming out at 7:15 or 8 o'clock tomorrow. Typically, I do the non-farm payroll Fridays at 7. I start the stream at 7:15. Then I can have the a bit of the pre-market done and watch the fireworks for the non-farm. If it is not out tomorrow, then we will not have any. We will only have economic numbers out at 8:45 and 9 that are meaningful at all. This ISM stuff, S&P and ISM. We've got the non-farm stuck in my brain. We've got the market on close and balance orders at 1450. And yeah, this is my virtual trading journal that I share with everyone for complete transparency and accountability. That's the reason the stream lasts so long, from 8 o'clock in the morning until 1500 every day. Notice that I stream and share my monitors, not just the application, so you can see any programs that are open and operational in addition to my clock in terms of hours, minutes, and seconds. And the date, which ties up to both IRT and Bookmap. No trades are taken this account off stream, absolutely. I follow following along with the name of this channel is the risk neutral trading, and I use multi brackets. This is the minimum package size for the risk neutral management philosophy. It has to be in even numbers. There's 2 contracts. They both have a stop, or the package has one stop, in this case at 12 ticks. Half of the package is at the first risk neutral or take profit target is for half of the package at positive 12 ticks. The same amount of ticks in the positive as the stop loss is in the negative. So this is R1, negative R1, and this is at R, positive R1. Risk positive. risk amount positive. And then the runner is 48 ticks, which is 12 points. The minute you achieve the first take profit, or T1, the trade is risk neutral, and the worst that can possibly happen is a scratch. Unless you have serious issues and you move your stop away from entry, which is, just, I don't know what to say. That is not the thing to do. Let me put it that way. Click like, thumbs up, subscribe. That would be a big help. It would be great to have you drop something in the chat where you are, what you'd like to see. If it would be helpful to have a link to these session prices that update live from 1700 on Sunday night through 1600 Friday evening. Just let me know. Subscribe, like, drop something in the chat, and I'll hook you up. I provide them to free and, no problems for a lot of people. Several different Discord rooms, and it doesn't have to be used in Bookmap. It comes as they come out as a CSV file, so anything you can use a CSV on. For example, these indicators over here, get the data off the same exact CSV as these flags, which is a Bookmap cloud note column. Cloud notes. And there you go. We're going to have the market on close imbalance at about 7 or 6 minutes or so. We'll watch the close, see what happens. Yesterday we had a big squeeze. That's what caused that big pop at the end of the day there, in my opinion. A short squeeze from overnight. My workflow here. This is the dome, full market, level 2 market. This is my micro composite column chart where I manually enter these levels and values. These are the high and low volume nodes pushed automatically from IRT to Bookmap, and then this is the full session volume profile, which started plotting last night at 1700. And here is today's RTH volume profile, which reset at 8:30 this morning. The notes column, which I've gone through in the pre-market, I changed the title to the open type expected for the day. I cleared the notes and then enter all the statistics associated with their prices based on the open type. And throughout the day, I update the micro composite migrating volume profile. There's no indicators on my charts or my Bookmap. There's a VWAP for both RTH and Globex. There's a mid for the RTH. There's a POC for each. The brighter yellow POC is for the RTH session, and the more muted yellow is for the full session. And there's a IB high and an IB low. Now, none of these levels or lines or anything that I do here is mysterious or complicated. It's all just data, probabilities, statistics, and price action. It's just strictly driven by that. The IB high and low are nothing mysterious. They are simply the high and the low of the first 1 hour of the RTH trading session. The POCs are simply mark the price at which the most contracts have traded so far in the session. What does that mean exactly? Well, it means that at 1341, this level right here, 67.55 was the price at which the most contracts had traded so far in the session. And at 13:44 and 43 seconds, it moved up to here. This became the largest volume. That simple. And the blue boy over here is nothing but a visual cue for me. I just scan quickly left or out of my peripheral vision, and if I see that blue line, I know I have the entire session in view. If I don't see it, then I need to fix that. I typically like to keep my price ladder at 1 point, meaning then I want to keep consistency in my perception of scale. How far is it moving? Is it ridiculous? Is it nothing? Like, for example, well, that's nothing. Hell, it's not moving hardly at all. Wow. Oh, look at that. Look at all this movement. Wow, I could get rich. It's all the same thing. That's 70. 60 we can't even see. That's only 10 handles, right? Now let's get it down to a price. Now there's 1 point. So each one of these move from here to here. From these lows, 63 to 66, that's 3 points. I have to be able to watch price action and understand the scope and or severity or what is my phone doing? Going crazy over here. Notifications blinking and bonking. The perspective or the amount of range that this movements are doing. There you go. That's pretty much the recap. It's all hanging on the sad to say, it's all hanging on the crowd in DC, which is pretty incredible. Pretty incredible. And there's our marking on close orders. This little bit of a blurb right here, that didn't amount to much, did it? Not our market on close orders, I should say. The market on close imbalance. They'll pop over here in a second. After we spend a few more $1 billion. There you go. Market on close imbalance. Sell side, sell side, sell side, sell side. You read these as 387 million sell side for the S&P 500. Yesterday, buy side was 1 billion and change. 431 million sell side, 62 million sell side, 325 million sell side. So, take them up, run them down. I think I actually have that copied. That was today. Now, 4.5 4,504,000,000. Yeah, can you imagine that? Billions of contracts. Wow. That always intrigues me. Okay, so we're gonna close her out here in about 9 minutes or 8 minutes, and I'm gonna be on my merry way and looking into my backtest code so I can get that shared with a couple of guys in Static who were asking about it earlier. And then I gotta put on my soccer dad stuff and do all that. I'm the driver in the family, so taking my daughter to college and her classes and around is next order of business here. I think what I'm gonna make her daughter for lunch here before she heads to class. Maybe some noodles. I don't know of anything else to share or to talk about here. This is not exactly the rock'em sock'em adrenaline-filled action that probably a lot of people like to watch. Unfortunately, that doesn't reinforce professional trading or, trading as a business, as I perceive it, as I understand it. And this is my virtual journal, so this is the real deal. This is not some account that I can just refresh every 15 minutes and blow up or not. And it goes all day, so it's accountable and it's transparent. And that's the case here. And I trade live, so it's not rearview mirror. It's not like I put on a stream for a couple hours a day and what do I do then? Well, I look back here and do a lot of rearview mirror trading. We traded up here and we took that out and we tested this line and then we got short and this was a structured trade short, and there's a lot of people that do that. And anybody can do that. Anybody that has a cursory knowledge of the vocabulary and kind of the basics can just make this sound like you knew everything that was going to happen. The trick is real time on the hard right edge. And we're going to close her down in 4 minutes. And then I'm going to get off to the testing out this back test. Testing the backtesting. And I'll look forward to seeing y'all tomorrow. Please drop something in the chat. Smack a thumbs up on the way out the door. That would be super. I'd really appreciate it. I've never really understood the mentality about how that works. If I spent the time to look at someone's stream for a few minutes, I hit the thumbs up and or subscribe because they put their effort to do that, and I'm looking at it. I don't quite understand the power that seems to give people. I'm sure it's that I don't understand the philosophy of it or the culture of it, I guess. And I don't quite understand that, to be honest with you. And not that anybody cares what I think, but there you go. Two minutes, boys and girls, a 2-minute warning. I must have a 2-minute buzzer or something on it. Oops. I must have a buzzer or something over there. Oh, I do have. Okay, here's the 2-minute warning. There you go. There's the 2-minute warning. I never use those things, so I don't have hardly any idea what they are. There's some, there's 6 buttons on the side of this mixer I have. This is a Mackie DLZ Creator. 1, 2, 3, 4, 5, 6 channel, or is it 5 channel mixer? No more than that, isn't it? Looks like 8. I don't know how that can be. Yeah. It seems to work fine. And like everything else, a lot of the stuff I do with OBS or whatever else, I'm sure there's a lot of functionality that would be pretty cool that I have no idea about, and I'll never figure out because I'm not interested in figuring that out. I'm not interested in going down the rabbit hole for that. My mission is to have a successful, consistently profitable business. And there we go, 15 seconds. Not any real pack of liquidity, which is kind of strange. We typically get a big bundle of liquidity jamming in here. And that's not happening at the moment, if you can see that. And there is the end of the day, the end of the stream. So have a great evening. Remember, this is very important. The most important tool that you have in your trading office is on your side of the monitor. You and your brain. Much more important than any monitors, programs, charting packages, internet connections, anything else. You need to be firing on all cylinders, well hydrated, well rested, not on tilt. If you're young or old or whatever you are, realize how many hours a day you spend looking at these screens, which is not good for your eyes, because when we're focused on a screen like this at this specific distance, our short vision short distance vision or focus muscles are locked in tight, and it's like lock your fists together as hard as you can, clench them as hard as you can for 8 hours, and see how your hands feel. Same thing with your muscles. That's why it's so important to get out in the sun, daylight, natural light, go for a walk, soft focus down the street, look off on the horizon. That relaxes your eyes. Big deal. Also be healthy, have a healthy body, exercise, workout, eat good, get plenty of sleep, know when you're on tilt or not emotionally, and have a great night. I'll see you down the road. See you tomorrow.